Hey, Jamie, Steve, what's going on?
Hey there, Scott. Steve, what is
Hey,
happening?
I'm just looking at aftermarket craziness. I'll get to it in a second.
Yeah, okay. Well, I figured you'd have a little bit to talk about on the big picture here. But before we get into that, welcome everyone to the first office hours of May. April's in the books. And here we are, May 6th. So welcome one and all. Before we get rolling here, just a little blurb to make the lawyers sleep a little bit better at night. Just want to make sure everyone in attendance is aware of the fact that all of the info that we share with you guys, whether it's this webinar or any of the other 8 webinars that we're hosting throughout the week, we share all of this information with you for educational purposes only. If you do need advice, what to buy, what to sell, when to do it, all that good stuff, please seek out someone who's licensed to do that for you, like a registered investment advisor or a Series 7 licensed broker. Um, Once again, everything we share with you is for educational purposes only. So I think that'll cover that little disclaimer there. And it is test drive week, so I'm assuming we've got some new people in the crowd today. For you regular attendees, please bear with us here. You know the drill. Just want to tell everybody about the community and the things that we've set up around the award-winning technology that is TI Pro. So as I mentioned earlier, we've got 9 webinars a week coming at our users, all hosted by myself, Sean, Andy, Steve, Dan, Brad, the whole crew. All kind of starts though at the very top here with the trading room hosted by Barry Anderson. He opens the room 30 minutes before the open. The trading room just got a new facelift. What does that mean? We got a new software in there that's a little bit more conducive and friendly for everyone. It's slowly getting all the kinks ironed out, functioning pretty smoothly now. So on any given day, could be 400, 500, 600 people in there, all sharing their ideas. But most importantly, we've got Barry in there. He's the moderator, not only showing you his trades in real time, but showcasing his techniques and how he uses trade ideas, as well as just helping out with new people in there as well. So if you haven't been taking advantage of the trading room, by all means, you need to get in there. One of the best things, other than Barry in there, is the price of $0.00. If you shopped around the web for trading rooms, you know that any of them that are worth their salt have a pretty hefty price tag, but not here. So get in there, take advantage of the trading room. As you can see right below here, it's Monday. You get myself and Steve. Steve's going to take the steering wheel for tomorrow's Trade of the Week webinar. Andy Lindloff's going to ride shotgun with him. Hump Day rolls around. Q&A demo with our Chief Executive Officer and Founder, Dan Merkin, as well as our Chief Technical Officer, Brad Williams. Always good to hear what those guys have to say, get a little sneak peek of maybe some functionality that's coming down the pipes, since they're the guys creating and testing it all before we even get to test it. So that's what's going on the Wednesday webinar. Thursday, 5 p.m. Eastern webinars get rounded out, or I should say the 5 p.m. Eastern webinars get rounded out on Thursday with Andy's Trading Studio. Always interesting with Andy, always preparing new alerts and new top lists to share with everybody. I ride shotgun with him. Then on Friday, we like to change it up just a little bit. We have been, engaging in the Friday support webinar for quite some time now. Seems like only yesterday, but it's been quite some time since we brought this one into the fold. But we allocate 3 hours for this one, starting at 11 a.m. Eastern time, and assuming the room is full and attentive, we'll take it all the way to the 2 p.m. time there. So that's great for anything TI related, whether it's questions about Holly, questions about strategy fabrication, or anything, Brokerage Plus, anything is fair game in the Friday support session. And you got myself, Steve, Andy, and Sean in there, all putting our noggins together, trying to knock out your questions as efficiently and quickly as possible. And that is not all. We've got TI University as well, Monday through Thursday. These guys start at 12 p.m. Eastern, Monday through Thursday. Beginners 101 on Monday, Tuesday 201, Wednesday 301, and then rounding it out Thursdays with advanced 401. So once again, these all start at 12 p.m. Eastern. We also have these recorded on our YouTube Trade Ideas channel. So, if you do have to be at work all day and you can't make them in real time, you can always go watch the recorded versions because the content matter is pretty static in there. Might change up a few details here and there. But Live is always the best, and if you can't make it live, go watch the pre-recorded versions on the YouTube channel. And before we get into today's itinerary, I just always like to show everybody how the user base or potential users are responding to the introduction of our AI technology. As you can see, the orange bar here, 2016, very first day of 2016 is when we brought the first AI module online. As you can see from my channel bar over here, we have 3 of them now. Of course, when I'm referring to the first one, I'm talking about the original 1.0, or what we affectionately call Holy Grail. But needless to say, we've had tremendous subscriber growth since that point in time, and would expect 2019 to follow the trend here. We are making some changes to the AI, going to make it simpler to follow and consolidate the 3 into 1. Me and the boys here haven't even got our test versions of that new functionality yet, but from what the coders tell us, it's not too far off. So exciting stuff coming down the pipeline, because you may or may not have noticed, if you've been with us for a long time, we innovate fast and furious. Lots of new versions coming out on a monthly basis, so good things coming down the pipeline there for the AI. All right, so today, not your average trading day. You've probably heard myself and Steve and Andy talk about how the AI is impacted by gaps. Typically, the larger the gap, the harder the AI has, the harder time the AI has finding good alpha out there. And today, no exception. So Steve, I guess you're probably itching to get in there and talk a little bit about the overall market action today. So if you're ready, I'll just kick it over to you.
Yeah, itching. I don't know. That's a good word. I don't really know what to say other than hello, everybody. And this. Oops. Let's show my screen first.
I just kicked it over to you. Mm-hmm.
Yeah. All right. So there we go. A few things stand out, really. The all-time highs we talked a lot about how we were going to get there eventually. We just weren't quite sure how. Seems we took the easy toll road, because we had a lot of days where we were kind of groaning and grumbling about gaps and sideways action and dojis and closing pretty much where we opened. And so it kind of became, I think, a be careful what you wish for scenario. Once this orange line here, of course, is transposed over from the previous all-time highs, we'll zoom into it even more and see some interesting stuff here. Look at these wicks. There's probably not a lot of coincidence that, for the most part, and I eyeballed this line, but yeah, just for fun, let's go see what the actual number is, shall we? Just for fun. The actual number of the high, going back here, redraw this to get that high on that day right there, is 93.94. Okay, let's zoom back in. Let's adjust our line. We were pretty darn close. So I'm going to go 93.94. We'll call it that. Was pretty much on. So my point was, all right, I said, well, when we get to this levels, what is going to happen? The bulls are going to want to see closing prices, closing candles above that prior high level. That's the line in the sand. It wouldn't be surprising. Also, we talked about some sort of pullback, give the troops a rest, pull out the battering ram back, and give it a few days and try and come back and attack it again from underneath. Didn't really get that. But, well, we did in a sense, but I'm getting ahead of myself. What we've been getting are these little rejection wicks. Okay, I'm going to include those 3 as similar wicks. This was just Friday. Friday, Thursday, Wednesday. Wednesday, we opened up, but remember I said it's important that we post closing prices above key levels, especially pivot levels. And we had nothing of the sort there. This was closing way below, even though we tricked everybody on the open. So we're still kinda yet to post a closing candle definitively above this confirmed average here, this line, this pivot, 293.94 to be exact. So that's the story that I'm seeing. And what's happening is, the second part of this equation, I think, is the volatility is no real surprise, because I think a lot of people are looking for the same type of scenarios that I'm talking about. What's going to happen when the price gets here, and if it fails, well, then what? You know, we're probably not going to have these little dojis. We're going to start to have some volatility, which brings me to, today's gap down. Look at this. We actually went down. There was a net change close here. We went actually down today on a giant green candle. For the most part, that was our net close right there. But the story was we opened up down here and we could have gone either way. But we didn't go much to the lower side. We just popped right back up. So what's happening is this market's getting spooked. It got spooked over the weekend on Sunday night, again, about China trade relations, our biggest trading partner. Well, let's fast forward here to, here's our futures aftermarket. If you're not aware, there's more trade jawboning happening. These are the futures. They've since closed. They'll reopen here in about 45 minutes, but let's translate that into our intraday chart here to kind of show you. There's our green tag. We are way off our highs again. So the volatility is back. Careful what you wish for, like I said, show post-market. And I think the reason for the volatility, we keep gapping down and getting freaked out about the same news. I mean, how often have you seen the headlines, the China trade, U.S. relations, jerking the rug from underneath the market, and whether after hours or in the last hour of trading? I mean, it just keeps happening, but market hasn't really learned its lesson. So up at these levels, this morning it learned its lesson. It bought the open. Guys like Sean, who are doing a great job reminding people that we're still buying the dips in this market, and he would be correct. We are still buying the dips, as indicated by this giant downside wick on Friday, downside reversal wick on Thursday, Tuesday. Except for this one day, this big red bar was the anomaly. Everything else has been buying back the market. And so there's still that underpinning bullishness of the balloon you're holding underwater. You let it go and it pops right back up. But we just need confirmation that a few closes above this line will do it. Now, strange things happen when you ask for, simple pullbacks. That works. I mean, that's kind of what I was talking about. That pulls the rubber band back, or pulls the battering ram back, and gives us a little bit of a tempt in the running start at these levels again. It's not exactly the process or the road in which I would have envisioned it taking. I mean, again, it was a giant gap down today that was immediately bought right back on the open. But here we are again. Here's our current price after market and that green tag, right? But we split this candle right back in the middle. Draw that so you can see back to indecision in after market hours. But again, it's the same silly catalyst that keeps drawing this market back. So a few more of these types of scenarios, and yeah, we might have the crazy ability to put price action back through this orange line and take us back to all-time highs. We'll see, but boy, it sure has not been the easy road taking to get there for sure. So those were some of the main thoughts I had. The SPY we always start with, that's the one we're really keying off of. And I think given these wicks and that gap fail 4 days in a row, we couldn't hold above that close. That's what the rest of this market's looking for. If we look over at the tech heavy Qs, kind of the same story over there. Let's draw the respective eyeball it, because we are definitely through the all-time highs in the Qs. We basically just came back and revisited it last Thursday. Nice bottoming wick on that day, and then this morning we gapped below the all-time highs in the NASDAQ and wanted nothing to do with it and bounced right back up. So extremely bullish in the NASDAQ. Technology remains extremely bullish, and again, even over here, all this congestion, although it was the crazy road doing it, would be enough, for enough back and forth to move and take a leg higher, if that's what happens. And then, interestingly enough, if the bulls do get their way, interesting action in the IWM. Last 2 days, we had the double gap down and rip higher, gap down and move higher on Friday, gap down and move higher again today. So this thing is, ready to go, locked and loaded, whatever you want to call it, and nice looking, also shallow, kind of a cup and handle going on here. So, well, why can't I grab that? IWM is looking really good. That's looking pretty ripe over there in the small caps. And then remember the respective all-time high way back here in this orange line. There's a lot of meat on the bone here for the small caps to maybe catch up and participate to the rest of the herd. So that's what I'm seeing there. Again, the one leading the pack is the NASDAQ. S&Ps are now having a hard time chewing their way through this all-time line, and then really not much going on in the Dow, just kind of always there in the back, not looking bad either. Same type of a candle today. So we'll see what tomorrow brings. There's the mid-afternoon am I looking for? There's the aftermarket in the Dow, giving some back there. So the markets are giving some back across the board. One more check in on the aftermarket just to see what's happening there. It looks like that was it for the bounce in the SPY. So here was some news that came out post-market from the Treasury Secretary or whoever, dropped the market, a bit of a bounce, and we were right back in no man's land. But crazy as this action is, it could be enough gyrations and enough craziness to propel us back through all-time highs now that we've had a little bit of volatility and a little bit of pullback. So that's all I got, Jamie.
Yeah, it's interesting because, hey, buy hand over fist today during the regular session. As soon as the market closes, more fear, uncertainty, and doubt. And that's what we're seeing in the aftermarket. And heck, who knows? Flip a coin for a direction tomorrow. Yep. We'll see.
Don't forget, today's candle was a net change down. As bright and shiny and long and green as it is, it was still a down day.
Well, you know, all social media and all that good stuff. Once everybody saw the futures doing what they were doing over the weekend, you know, these trade deficits, I'm like, well, isn't that kind of good for us? But I mean, you know how that goes. I mean, what's perceived as negative is sometimes positive, and sometimes what's perceived as positive, we get a negative move. So, hey, all the more fun for us with the volatility coming into play. Yeah. So we'll just have to react the best we can tomorrow.
A lot of knee-jerk reactions as we sit here and remain camped, you know, under these all-time highs.
Good stuff. Thank you very much. Let me just go ahead and grab it here. All right. Hopefully you got eyes back on my screen now. And so, you know, as we talk about ad nauseum here, the bigger the gap, the more it kind of interferes with not only our own trades that we find manually, but of course the statistical system known as Holly does not make it easier on her. So nothing to write home about today as far as Holly goes. We do have a couple of risk-on examples to look over here. But boy, I'll tell you, and sometimes you don't trust your own metrics, but the CC windows today, they told a story about the remainder of the day, coming in at 62% bullish after the first 15 minutes or so. Of course, look at this first 15-minute candle here. You're thinking to yourself, well, this is just mimicking this initial push up. You know, how much more upside could we have here, especially with the gap down? I don't trust it. But lo and behold, these things told the story pretty accurately here after that 15-minute candle. We just slowly, a little slow grind up the rest of the day. So just wanted to point that out. These things have been pretty accurate at calling market direction, and today was no exception. All right, so let's talk about Miss Holly here. And I was kind of pumped to see that she didn't overtrade too much today. I had visions of 50 trades being up here, but that wasn't the case today. We can see the total cumulative trade count here. Let's see, we had 12 and 15. We had 27 total signals. And, you know, nothing to write home about. We could call 1.0. Might as well call 12 cents up flat and 10 cents down flat. These two guys kind of canceled themselves out on 12 trades. And then we did have NEO posting a moderate gain of 67 cents on 15 trades, with the added benefit of some risk on to examine here. But once again, we can see risk off here in the first two modules and the 3 trifecta on risk off here. So we're not going to be seeing any spread other than maybe 7 center here, or excuse me, a 9 center here. What do we got here between risk off and risk on? 5 cents. We got a little bit more interesting ones down here to look at. And when I say a few, I mean 2. So let's take a look at these guys right quick. These coming from NEO. And once again, if there's anybody out there in the test drive, which I would assume that there's a nice handful of people out there, maybe you're seeing all this for the first time. So what you're seeing right here are the individual blotters for each one of our AI modules. I've got Holy Grail up here, which is 1.0, 2.0 right in the middle, just like it is on the toolbar or the channel bar, and then Holly NEO down here at the bottom. So we can see all the trades that were presented from each module. and the times that they were issued and why the AI closed the trade out in the exit reason column. So we're going to talk about a little thing called risk on here versus risk off. Notice the columns here for you new folks. Risk off right here, risk on right here. So what is the difference between risk off and risk on? Well, Holly's got reasons why she exits the trade. She's got risk management, just like you and I have. If we're wrong, we're going to get out with our stop loss. Maybe we have a profit target in there. So Holly employs both of those things, stop losses and profit targets. And she also uses a timed hold. If I pull my, I guess I lost my strategy panel here. Let me grab it. Here is the strategy panel. And we can see all of the strategies for each respective module. So let's just go ahead and switch this one over to Holly Neo. And we can see here are all the strategies that produced all of the trades that we're looking at right here. So this is the strategy panel. These are the individual trades. And of course, when a trade comes out, we can see the strategy that issued the trade. So getting back to the timed holds, focus on the time stop column right here. It shows you what each strategy was designed around as far as the intraday hold time. 60 minutes, 120 minutes, 45, 30. See, I forgot which one we were looking at here. We'll just go back to AMAT here. Boy, I've probably traded this thing a gazillion times in the past 20 years, but here's AMAT popping up yet once again. Let's take a look at the strategy that issued it. Yesterday hammer, today strength, and we can see that one right here, kind of right in the middle of the pack as far as how the strategy was back testing coming into the session. That one was designed around a 2-hour hold time. Now, when we look over here at why she exited the trade, well, this is one of the audibles that she can call. So let's count them up real quick. We have profit target, stop loss, and timed hold. Those are the three main ones. And then she can call two audibles to get out of a trade early in the form of reduce risk or profit save. Now, just going to kind of scroll down here. Don't see any profit saves for Neo, but it's the same thing. She can get out of a winner early if it's not moving the direction that it's intended to or kind of going sideways. The AI has the option to pull the plug early on a winner or a loser. In this case, it was a 10-cent loser in the form of reduce risk. So actually, I take that back. Keep getting AMI or AMAT and PCMI confused here. She reduced the risk, but still ended up with a 2-cent winner. That happens from time to time. Sometimes we'll see a reduced risk at a small gain, and sometimes we'll see a profit save at a very small loss. It just depends on how quickly the market was for that stock. But let's take a look at the entry signal first. The blue arrow, notice when I click on the blotter here, it's going to tell us exactly where the buy signal was generated here. The blue line is going to correspond. Blue arrow here is pointing to the 15-minute candle. So this is right where the buy signal was called on AMAT. And over here we can see clearly identifiable at the bottom here is our stop loss. Also, you're going to see it in the margin over here. Now, if there is a profit target, and on this one, if we focus on the profit target column for yesterday hammer, today strength, there is no profit target, but it's one of the only ones on here. We got 3, 4 on here that don't have profit targets. All the rest have $2, $1, $1.50 profit targets, but this one had none. If there were a profit target, you would see it up here according to the price, where a dollar would be on top of the entry price. Now, let's see here. Why did that compress like that? Okay, so notice the shaded area here. This is the time that Holly spent in the trade, and we were just going sideways, ebbing and flowing around the entry signal here. And this is what I like to call the classic reduce risk or profit save exit. Why did she decide to get out early? Because time is passing. Each one of these candles is 15 minutes, so we have almost 2 hours pass. Not quite 2 hours, but 1, 2, 3, 4, 5, 6, about an hour and a half after the entry bar here. And the trade is not heading in the direction that it was intended to, which was up in this case. So the longer a trade kind of ebbs and flows, break even, that's when the AI is going to be more than likely to pull the plug early, either in reduced risk or profit save. Now, right here is where she pulls the plug for that 2-cent loser. That's why we're seeing a 2-cent, or excuse me, 2-cent winner, Jamie, a 2-cent winner here. Now, if we see the AI exit, and we like what's going on in the chart, because we all know a lot of the times it boils down to timing. We might make a good entry, but if we get impatient, take our small loser only to see the thing go in the direction that it was intended, happens all the time, will happen many times in the future. But the bottom line is this: if we see the AI making an exit and we feel comfortable sitting in the trade because, well, we just feel like giving it a little bit more time, we can go risk on. It's simply us ignoring the AI's exit signal and saying, you know what, I'm going to take a little bit more risk. I'm going to ignore the AI's signal, and I'm going to stay with my guns here. I'm going to stick with my guns, and I'm going to stick with my hard stop right here. And had we done that, would have taken a little bit more of a leg down to these prior lows here, but not even quite half the distance down to our stop loss. And remember, that's why we have hard stops. In case we're wrong, this is what we're willing to use. So it brings me to a good point. Holly's strong suit, what is it? It's statistical probability. That's what all of these data sets are here. These are statistically weighted averages as to the potential success rate for the next session here on each and every strategy. But it brings up a good point here. Just because we have good statistical probability does not ensure victory, right? It's kind of like the professional poker players. They know the odds on every potential outcome that's out there based on what people are doing, how many cards are already on the board, so forth and so on. But just because they play with statistical perfection does not insulate them from losing. And the same thing applies here, right? So Holly's strong suit are these entries, and a lot of the times we can get very good results by acting as a hybrid machine here, letting Holly point us to the entries and then us managing the exits. That's why we show risk off and risk on, because a lot of the times, if we like what's going on and we see Holly taking that small winner or loser, we can stay in it and get more than Holly does on the exit. And AMAT is the perfect case here. Would have had to sit a little bit of downtime here, but eventually as the day progresses, we get back to that break-even point, and boom, later in the day, the volume and the buyer come back in and take this thing higher into the close to the tune of 67 cents. So we've got a nice 65-cent spread here in between what Holly took and where the stock ended up. So that's what that's what our potential is here on risk on. Could have gotten the whole 65 cents if you held till the close. Heck, maybe you got out here. Maybe you took 30 or 40 cents out of this 65-cent spread. But that's the name of the game here when we're talking about risk off versus risk on, and trying to actually capture some of this spread between risk off and risk on. And what it's all going to boil down to is how comfortable do we feel? Has the thing, has it been real volatile? No, not really. It's kind of ebbing and flowing around here. I do like this setup for another reason, and that is later in the day, we just draw the line here across those initial highs. What happens later in the day as we get to this area here? Well, classic opening range break. If I draw a line down here, showcasing the low, then, we were already range bound when Holly called it. We stayed range bound for the duration, got about halfway down to our stop, but didn't get stopped out. And then slowly, as the day progresses, eke back up, and then boom, we break that line right here. And hey, it's not coincidence here that that was the biggest part of the move today, but we had statistical probability with Holly. We didn't get stopped out. We decided to go risk on, get a second buy signal here. Once you get proficient at identifying these range breaks, which are some of the easiest things to identify, we just draw a line across from the highs. As soon as it cracks it, if it does it with volume, even better. Which brings up another point. Today, I'm sure a lot of things we're experiencing high volume just due to the nature of the market. But as I plot through the Holly trades each and every day, I've gotten into the habit of just waiting and watching for the reduced risk and the profit saves for specific patterns like this. So Holly makes the trade here, doesn't close it out till here. So, it's a very good thing to start getting into the habit of checking out everything that she pulls the plug on and see if it's exhibiting these types of patterns. trying to figure out in your head, okay, well, I've seen this many times before. This might be one of those as well, just hasn't gotten up and gone yet. Now, AMAT did finish the day trading about 80% more volume than normal. So sometimes they go with lower or right at average volume, but anytime we see a setup like this, and then we see a secondary signal coming after the statistical probability that Holly gave us, it's definitely worth paying attention to here. The more volume, the better, in my opinion. So great risk on example there in AMAT, and I believe the only other one really worth talking about today, and this one was the reduced risk, where it's actually a loss of a dime here, whereas this one says reduced risk, but it was actually a 2-cent winner. Good example here from PCMI as well. Got the buy signal from Holly right here, and then what do we have? We got the same type of action, and there were a gazillion stocks exhibiting this same type of action today, so no big surprise here. Sideways action, she pulls the plug a little bit sooner than the AMAT trade. What was see, 1240 to 114, so about 35 minutes. And on the bullish pullback, we're geared for a 45-minute hold time. So she pulled the plug a little bit early, but it's pretty much the same song and dance as we saw on the AMAT, just not quite as pretty. Once again, we got the high right there. Holly pulling the plug. Still a nice little breathing room. Didn't really, come close to stopping us out on the hard stop. And then slowly but surely back up through the line. We start pecking at those new highs, and then boom, we get a nice little push into the close here. Of course, we're getting a little sell action on aftermarket, but I would assume just about everything else is. So a nice little spread there of 58 cents when you consider -10 and 48. Big difference there. So whether you pulled out 20, 30, or 40 cents or got all of it, that is the name of the game. Simply acknowledging the fact that the AI is getting out, but if we feel comfortable staying in, we stay in, we take on more risk in hopes of getting paid more on the profit. So we can only talk about what the market gives us, and today risk on, risk off spreads were pretty thin. Those were pretty much the only two, with the exception of some very small ones up here, which really aren't worth getting into detail about. We had a power hour short GLNG today, so we did have some risk on, risk off spread here, only to the tune of about 5 cents. But when you consider Holly only made 11 cents, that's almost 50% more than what she got on risk off. This one, a short sell, right? Just the opposite of what we were looking at earlier. Holly sells it up here. We get a little sideways action in the next 15-minute period around there, and then a nice push down. And can't really see how you could have done a whole lot better there. What was your hold time there? Oh yeah, that's why she's showing such a small gain there. It was like a 10-second trade right there from what I can see right. Oh, wait. My eyes are playing tricks on me. That's a 30-minute hold time. Yeah, so not bad. It looks like she covered on that upswing on the wick there. I was like, that doesn't look right. But I thought that's at 215 for a minute. So just kind of an untimely action there on the fill, which is a good time to point out max profit column here. So we got risk off, which is Holly obeying her rule set, risk on, showing us how much the trade would be up had we held into the close. But then we've got this middle column here. So even in risk off mode, down here at this low right here, 13 cents was the max during risk off hold time. So let me just reiterate that. Risk on, risk off, and then the max profit column is always going to show us how much was she up at any given time while she was in risk off mode. So here we can see on this PAHC trade, she booked 16 cents, but she was up 27 cents. So by the time she hit that timed exit, the thing had pulled back about 11 cents. So just shows you how much she was up during risk off period. All right, so we might run just a little bit short today, ladies and gentlemen, because it is test drive week. So I'd planned with this webinar to go over risk on, risk off. It just barely fed us enough to have any examples. So at this point in time, what I'd like to do is open the floor up for questions. for anybody out there that might be in the test drive that has any questions regarding what they're seeing right now. I've saved a couple of setups for the very end here, but we got a little bit of time to fill. So let's just go ahead and open the floor up here for a couple of questions to come through for any test drivers out there. You don't necessarily have to be a test driver. Anybody can ask a question, but floor is open. Let the questions come in. All right, here, just let me get my questions panel all expanded a little bit to where I can actually read the questions. Bear with me 1 second.
We also have an hour every day during the week, or over an hour this week for the test drivers as well to come in and ask any questions. It starts at 12 noon Eastern.
Yep, every day this week. All right, so Wayne, I see your question. Is your platform capable of trading within? Okay, I was waiting for the second part to tell me what within meant. For example, do I need a Ameritrade account or are you linked to a bank? Well, to use TradeIdeas Pro, it doesn't matter where you trade. You can use, it's a freestanding product, and you don't necessarily have to be trading anywhere. I mean, you can, or let me rephrase that, you can be trading anywhere and use TI Pro. Now, if you want the more advanced functionality, like our Brokerage Plus module, which allows you to auto-execute strategies that you fabricate within TI Pro, or maybe you want to automate some of the Holly symbols as well. This is our Brokerage Plus module, and it only functions with Interactive Brokers. Interactive Brokers is the only broker-dealer in which Brokerage Plus functions currently. We might add it to a couple of other trading platforms in the future, but as of right now, you have to be at IB if you'd like to use the Brokerage Plus format. Otherwise, doesn't matter where you trade, you can use TI Pro. Simply doesn't matter where you're trading. So Wayne, I hope that covers your question. Just soaking up Blair's question here. Let me read it. Okay, Blair, if you're experiencing freezing trade ideas, that is odd because our platform is a very thin client. It uses very little local resources on your computer, simply because, I've got a bunch of windows here, I've got a bunch of symbols pumping through at any given time, but all of the heavy lifting and the calculation, that's being done at our server farm. We're simply pumping out the answers to you once the criteria is met. So you shouldn't be noticing any slowdown with trade ideas.
The only thing I can think of is if you're using pinned windows, definitely don't do that. If not, come back tomorrow, Blair, during the regular market session. When you go to our website, there'll be a pop-up chat bubble like there is on a lot of websites these days. It says, "Hi, can we help you?" And there's a couple guys, William or Bill. They're much better at diagnosing the resource issues as to what might be going on. Offhand, a pinned window is a window that you've right-clicked and selected pinned next to. And what that does is it starts to create duplicate windows if you're bouncing around from channel to channel. So if your windows say right-click pinned on them, that could be the problem, and we can help you further. But if not, then let the guys in the live chat tomorrow during regular market hours have some of the details of what you got experience, and they'll let you know what a good solution is.
Right, exactly what Steve said there, Blair. And if you're brand new, chances are you don't have pinned windows, so you're probably not stacking them up, because if you pin windows and you forget that they're pinned, every time you open up your layout, I could end up having 30 of these charts, but I wouldn't even know it because they'd be perfectly stacked on top of one another. And that's what happens to some people sometimes, but typically you have to have a little bit of screen time with the product before that problem shows its head. So yeah, Steve was referring to the live help session. We've got a couple of guys that are very proficient at helping people diagnose why the system might be running slow. I mean, I've had people using 4-, 5-, 6-year-old computers and not having any slowdown whatsoever. So if that problem persists, hit that live chat. We'll try to set up a remote session with you.
Yeah, my desktop's 5 years old at least, minimum.
Yeah. So let's see. I think we covered Blair's question there. Let me soak up Scott's question here. All right, combination of low
I would
float,
say
high
one of
volume
us
with
can work on
stocks.
that if he sends it in.
Yeah, yeah. And by the way, this is a great time to point out channel 4 to the new people. Um, focus on my channel bar over here. I'm going to scroll down and I'm going to click on channel 4 here. And you're going to be like, well, what in the world are all these tiny squares? And the reason this channel looks like this is because we had to cram all these windows in here, because what you're seeing here are all of mine, Steve, Andy, and Sean's favorite trading windows. So you can take any of these and where is that low float window? I thought we had a low floater in here, Steve.
I'm not sure, but I did respond to him with the email. We can set up the parameters that you're looking for. It'll just take
Yeah.
about 10, 15 minutes of somebody's time. So send into that email. A support ticket will be created and assigned to somebody.
Right, and of course, Jamie's old brain's playing tricks on him again. Actually, we have a low float channel here, which I just clicked on. All right, so we have a low float filter. We can, you can designate how many shares you want to be maximum in the float, just with one of the filters that we have right here. So you can see right here, float. Okay, this one's capped at, I don't know if that's 3 million or 30 million, but we've got a float filter in there. So the requirements that you put out there should be doable within the product, but to get a little bit more specific attention, if you just put your requirements in an email and send it that info at trade-ideas.com, that way it can get some attention, but it sounds very doable based on the low float and the other basic characteristics that you're talking about there, Scott. All right, just checking out these questions here. Multiple tabs to get my ID set up for daily. Well, Blair, regarding your question, can you show an example of how you create an auto trading strategy that does an easy pullback at open? Well, I can point you in the direction. All right. Now, creating an auto trading strategy, that takes a little bit of exploring, all right, and back testing. But actually, Steve has created one of the strategies that we see show up a lot in the AI channel, which is called quarterback, and it's using the pullback alert that we have resident within Trade Ideas. So real quickly here, I can point you in the direction here. So if you have an alert window up and we go into configure, depends on what type of pullback you want to see. A very popular one is a 25% pullback from high. Since the open, you can see we have both of these. We have two different versions, since the close or the open. And we've got 25% pullback from the open, and then we also have a 75% pullback from the open as well. So while these are hard-coded, 75 and 25, you can't really mess with these guys, but we also have another family of filters that allow us to ask for price movement, and then you can get a little bit more creative with these guys if you want different time frames. We can ask the system to show us, hey, show me something, obviously if we're, depending on what type of intraday bar you like, if you're watching the first 15-minute candle or the first 10 or 5-minute candle, you might want to use one of these guys and go, okay, I want to see after the first 15 minutes or 10 minutes, anything that's pulled back X amount of dollars or a certain percentage amount, because we have these in both dollar and percentage values. So this would be a great place to go as well if you want something that's outside of the parameters of the 25 or the 75% pullback. And once again, as Steve was pointing out, the webinar that's going to be starting tomorrow at 12 p.m. Eastern, that's going to be a great live environment to get in, to get some of these things kind of fleshed out, since we're all going to be in there talking shop. No access. I forgot, Steve. It's no access to Brokerage Plus or no access to Holly Automation.
I believe there's access to Brokerage Plus for people who are, in fact, connected to or have an
Yes.
ID account. Ideally, if you haven't seen any of the videos yet, we can certainly give those to you. That's a great place to start. You know, we can try and address some of that tomorrow in the 1 hour setup tomorrow. And but it just doesn't include auto trading to Holly, I believe.
Right, I believe you're correct there. Kind of backtracking to Scott's
Yeah, Blair,
question
I'll drop
about.
some. I'm sorry, just to let you go, Jamie. I'll drop some videos, Blair, that I think are important into the chat window that are pertaining to that, and anybody else that wants to see them.
Perfect. I was just going to circle back around to Scott. Scott's saying he's having to flop back and forth between channels, right? And is there any solution for that? And what I would say is this: let's say you're on the pre-market channel and you like to, see the stocks that are gapping up, gapping down, maybe the things that are moving around pre-market. But let's say you're only getting value out of gap ups. So you don't want to have to keep flopping back and forth. So whether it's the pre-market channel, as what we're on right now, or any other channel out there, to make a window that's within a channel your own, you can pluck that window right out of there and make it part of your default layout simply by right-clicking on it, coming down here to say Save to Cloud. Once you save that window, and let's say I pop back to my default layout, which is, what I stay on most of the days, and now I want to incorporate that window into what you see here so that it's right there and I don't have to flop back and forth to the pre-market channel. I say load from cloud. We can see that window sitting right at the top here. It's always going to show us the time and the day in which it was saved. So to spawn that window, I just say load. Now I can find a home for that window. I can park it here. I can park it on my other monitor. Once I find a home for it, I simply come back here and I save my layout, either saving my default layout to my local hard drive or saving that layout to the cloud by using the cloud functionality and saying entire layout, naming that layout, whichever way you want to do it. It's always a good idea to save your layout to your local hard drive and then back it up in the cloud so that if your hard drive ever decides it wants to give up the ghost, everything's backed up in the cloud. So Scott, I hope that sheds some light on your issue with flopping back and forth between channels there. All right, Blair's happy with what you gave him, Steve. So no more questions. I'll give it about 15, 20 seconds for any more questions to come through. And if we don't have any more questions, we'll cover some of the nice range breaks that a couple of my favorite windows popped out today because they were few and far between. But hey, when the quality's there, the quality's there. And you just had to had to be a little bit more patient because, hey, once this first 15-minute candle got done with and we didn't act like we were going to pull back to lows, well, it was off to the races. A lot of things started coming out of the woodwork. We were chatting today and talking about how, man, the gap fill top lists are just chalked to the brim today because everything was catching traction along with the major indexes. All right, Wayne, let me soak up your question here real quick, and then we'll move on. Yeah, Wayne, and that's kind of what we talk about a lot here is statistical probability. That's Holly's superpower if she were Superman, right? And then, a lot of the times we can make a better exit than the AI because, well, it depends on how proficient, your chart reading skills are. But Holly doesn't look at charts. She's playing statistical probability with these entries, with that statistical weight. And once we get into something based on her recommendation, well, we can just blindly take the trade on the statistical probability. But if you're like me and Steve and Andy, we're viewing Holly as just another high quality information stream. But it's different because it's based on statistical probability. If I pull one of my other favorite windows up over here and we take a look at the configuration, this is just the event that I'm looking for. I'm not assigning statistical probability to it. I just know when I want to see a stock that meets these filter requirements and then hits a new high, and then I'm examining the chart to see if it's a timely entry or if I've missed it or, if I'm even going to take the trade at all based on the technical aspects of the chart. Whereas Holly is bringing us these based on statistical probability. So a lot of the times, as I was saying earlier, I'm perusing all the Holly plays that come out in real time as she issues the trade. Then I'm also waiting for her to start closing things out in timed exits or reduced risk when she's still flat to up or down a few cents. to see if the trade still looks good, but just needs potentially a little more time before it does what we hope it does. So I'd say, getting back to your question there, Wayne, first and foremost, observation is crucial, right? To get used to seeing a statistical system in action, we just need to sit and watch as many days and as many hours as we can to get comfortable with the types of plays that she's coming out with. So a lot of the time, I'll wait and wait and wait until I see something that Holly comes out with, because it's got that statistical probability to it. And then I'll also notice that it's exhibiting the pattern that I like to play. And that'd be like an auxiliary or a secondary reason for me to get into the play that Holly's spitting out. Same way on the exits. She can't read charts like we do. We're a little bit more proficient at chart reading. Holly's not viewing that data in that capacity. So kind of circling back around to what we saw with risk off and risk on. If we got into this trade with Holly on AMAT, yeah, it's not scary. It's not jerking down here and acting like it's going to stop us out. It's just taking its time, right? Now, eventually, this one took a long time before it got into profitability, but it got there. So in the meantime, we could sit in the trade. We never got stopped out. And if we wanted to, once it got over here and broke this plane, we could have even had a great opportunity to add to the position. So once again, Holly is not a magic money-making machine, but she's very different compared to what everybody else has out there, because all of these trades are being generated via a statistical model and showing us statistical probability based on the back test. So Wayne, I hope that helps illuminate the situation here. And we're just about 5 minutes till the top of the hour, so it looks like the Q&A session ate up the time here. So I tell you what, Scott, if you're waiting in the wings, we're ready to have you walk us out and tell people how they can save a little bit of dough, whether it's a new subscription or a upgrade.
Sounds good. Yeah, a couple items. There's still time to sign up for the test drive if you're not in it and you want to sample Trade Ideas Premium, try out the AIs, all that good stuff. You can sign up through Wednesday, May 8th. Just sign up before midnight on Wednesday and you still get 5 full trading days. In other words, your trial will extend into next week if you do sign up before midnight on Wednesday, and you'll still be eligible to get into the contest that you'll get information about too if you purchase a test drive pass. So keep that in mind. Just go to trade-ideas.com/test drive to check it out. We've got an ebook that both Jamie and Steve contributed chapters to. It's a good one to keep on your desktop. Just download it by going to trade-ideas.com/ebook and putting in your email address to get the download link. It's got 5 chapters. Each chapter has a way to stay afloat in a rocky market. 5 ways to win in a post-BTFD market. As a podcast, usually weekly, you can find it and subscribe to it and get ready to hear the next one by searching for Trade Ideas Podcast in whatever app you listen to podcasts in, and add us as a subscription. You can also look through some back issues. We've got some interviews in there with other traders and all kinds of stuff. There's a code that's good this month, and it is Spring2AI, all caps. That's misspelled slightly. It should be, if you want to refresh that, it'll be correct now. It's Spring2AI, and it's all caps, just like you're going to see on your screen after you refresh that one. You get rid of the T there is what I'm trying to do. It's just supposed to be Spring, letter 2, AI, but you guys will get an email tomorrow or with an update that's got that code. Saves 15% off the first month or year. There you go. First month or year of any Trade Ideas subscription. And you can also use this to do an upgrade. If you're already a Trade Ideas subscriber, just go ahead and plug that in when you're doing an upgrade, and you can save. We're going to have a recording of this webinar up later on tonight or tomorrow, so stay tuned for that. And thanks, everyone, for attending.
Thank you very much, everyone. Thank you, Scott. Thank you, Steve. And boy, can't wait to see what happens tomorrow. See you guys then. Bye-bye.
See you tomorrow.
Bye.